Alright, gang, it's your boy Nature, aka Nature. I already know what time it is, man. We back for another video. Alright, so in this video, we just going to be talking, about, Japanese candlesticks. Alright, so we already kind of went over it. Shit, that's my Facebook right there. We already kind of went over it a little bit in the OnlyFans, but we're going to go over it again. So, y'all know how I do it. So we're going to do it like this now. I just doing those videos for my people on live, on Instagram live. So you already know we back. Alright, so let's just go to the definitions, look them up. Alright, so we got hammer. First one we're going to do is hammer. We're going to do all the, and then after we go through all the Japanese candlesticks. These are the most ones that you're going to be seeing. Like I said, for my OnlyFans, y'all already know I give y'all everything. So y'all get all the information. So, y'all already know how I give it up. Everything I can do to help y'all. So, win in this market, make money in this market, because you can really make a lot of money in this market. Trust me. I've been making a lot of money in this market. I'm going to be making a lot of money for a long time. So, anything I can do to help y'all win, I got y'all. So these are Japanese candlestick patterns that you're going to be seeing. Like all the Japanese candlestick patterns that you're going to be seeing 9 out of 10 times in the market. So we're going to start with the hammer. Alright, so the hammer is a single Japanese candlestick pattern. It is a black or white candlestick that consists of a small body near the high with little or no upper shadows and a long lower shadow or tail. Alright, so it has a little or no upper shadow, as you can see in the picture, little or no upper shadow, and it has a long lower shadow or tail. It's called a hammer candlestick, single candlestick pattern. It's considered a bullish pattern formed during a downtrend. So when you see a hammer formed during a downtrend, you're going to see a hammer formed during a downtrend. That's the only time you're going to see a hammer formed during a downtrend. Most of the time, 9 out of 10 times, it's going to be white or green. Like I said, my fans, y'all already know that I trade in white and black. White meaning it's going up, black meaning it's going down. Y'all do green and red. Green means it's going up, red means it's going down. It's cool. It's whatever. Sometimes I'll do that for y'all in the videos just to give y'all, I know some of y'all trade with green and red. But, alright, you're going to see this hammer bullish pattern formed during a downtrend. A hammer candlestick pattern. So how could you meet the following criteria? For a hammer candlestick pattern to be valid, the candle must either have a very short upper shadow or no upper shadow at all. So y'all know the little upper shadow is the upper wick. For it to be valid, it needs to have no shadow or little shadow at all. So the candle must either have a very short upper shadow or no shadow at all. The candle lower shadow must be the tail must be at least 2 times. So we're talking about the shadow, the little tail that pops out at the bottom of the hammer. It needs to be at least 2 times the size of the height of the body, and the candle must be formed during a clear downtrend. Alright, during a clear downtrend, the candle body should be located at the upper end of the trading range. Alright, it should be up at the upper range of the trading range. The body color is not important, though a white candle hence a more bullish base. Okay, the candle should be confirmed. The candle should be confirmed by the following day with price trading above the hammer body. So the following day, that hammer should be confirmed by seeing a candlestick, a white candlestick or a green candlestick above the next following day above that hammer body. So don't get confused with the hammer and the hangman. The hammer and the hangman, y'all already know the hammer and the hangman look identical, but the hangman only forms at the end of the uptrend, with the hammer forms at the end of a downtrend. Alright, so I hope that helps. Alright, like I said, we're going to go through all of these real fast. So next we just did hammer. So next we're going to do, let's do hangman next. Alright, let's do hangman next. Alright. Boom. Do hangman next. Also, hammer is a single candlestick pattern. Hangman is a single candlestick pattern. Alright, so let's do Hangman next. Like I said, I got y'all. Y'all know how to give it up in the OnlyFans, so don't even worry. I got y'all with anything, everything that I know, y'all gonna get it. So Hammer and Hangman look identical. Alright, Hangman's at the top, Hammer's at the bottom. Alright, of the downtrend, Hangman's at the top of the uptrend. Y'all already know that though. If you watch that last OnlyFans video, I kind of went in deeper with the a little bit with the I drew it out on y'all on paper so y'all can see how that really looks. Alright, so a Hangman is a Japanese candlestick. It's a single Japanese candlestick pattern. It describes it having a small body, a little or no upper wicks, and a long lower shadow. In order for the Hangman candle to be valid, the lower shadow must be at least 2 times the size of the candle body, and the body of the candle must be at the end of the upper end of a trading range. So it must be at the end of an uptrend when you see a Hangman to be valid. Alright, so the Hangman is composed of only one candlestick. It's a single candlestick pattern, but it must be surrounded by candles that confirm its validation. So, or validity. So for this, to identify a Hangman candlestick pattern, look for the following criteria. The lower shadow should be the tail should be at least two times the length of the body. There should be no upper wick or as little as possible. It should be a very small upper wick or upper shadow. Okay, it should occur at the upper end of the training range, at the upper end of the charts, at the resistance, at the upper end of the resistance of the training range. And the color of the body is not important, although it should be black because the body should be more bearish. It's a bearish for black. We trading white and black. Green would be bullish. Or white would be bullish, and black would be bearish, or red would be bearish. So bearish means it's going down, and black means it's bearish means it's going down, and black and red means it's bearish. So although it should be a black body suggesting a more bearish result, meaning it's going down. Price should be in a definite uptrend before the Hangman occurs. Okay, the Hangman must be confirmed on the next candlestick, either with a black candle or a gap down with a lower close. So to confirm this candlestick, it needs to be the next candle either needs to be a black candle or it needs to be a gap down from the Hangman, a gap down lower, and it must close lower than the Hangman. So you're going to find the Hangman at the top of an uptrend. Alright, so the Hangman candlestick can be used to identify a short bear reversal as long as the shadows indicate selling pressure. The validity of the Hangman candlestick is confirmed by how price behaves after the candle is formed. So if you see a black candle or a red candle form after the Hangman, that's the validation right there that price is in reversal, or it's going to be a reversal for a short period of time. Alright, so if the next candle falls below the Hangman candle, this can be a good entry to go in for sales or for shorts. Alright, so we just went over Hangman, Hammer. Alright, so go over a few more. Not even a few more. We're going to go over all of them, of course, all the candlestick patterns. Let's do Shooting Star next. It's another single candlestick pattern, Shooting Star. So let's just do Shooting Star next. Shooting Star. Baby pips. Alright, so we have this Shooting Star. It's a single candlestick pattern. A Shooting Star is identical to the inverted hammer, and just like the hammer and the Hangman is identical, the inverted hammer and the Shooting Star is identical. Y'all already know that. It's the inverted hammer right here. This is the Shooting Star. The inverted hammer is found during the downtrend. It's a possible bullish reversal, which we're going to get into. And the Shooting Star is found during an uptrend. It's a possible bearish reversal, which we're about to get into. As you can see, the Shooting Star is a bearish reversal pattern that looks identical to the inverted hammer, but it occurs when price has been rising, and shapes indicates that price has opened at a low rally but pulled back to the bottom. Alright, so price open, it indicates that you know how to read the wicks and stuff. Price open went all the way to the top, and then eventually sellers came in and closing price back down and pulled back to the bottom. So it's a single candlestick pattern. We can dive in a little bit about it right here. A little bit more. Shooting star. It's a single candlestick pattern that is found in an uptrend. The candlestick can mark the top. Can be marked at the top, but it's often a retest. A shooting star is formed when price opens higher. Trades must the trade must be higher and then close near the opening. So the trade must go up higher and then close near the opening for the shooting star to be a shooting star. It's a bearish reversal candlestick. It looks like an inverted hammer, except that it's bearish. The shooting star pattern formed by a single candle with a short body or no shadows and very long upper shadows. Alright, so this is a long upper shadow with a short body and with no lower shadow. Alright, it's to identify a shooting star candle, look for the following criteria. A shooting star won't occur at the end of a downtrend. It will occur at the end of an uptrend. The candlestick must occur after an uptrend. As a shooting star, it makes sense for the signal to occur high up after price has gone up in the sky high. Shooting star. The candle must have a short body. The lower shadow should not exist or be very small. It should be very small. The lower shadow, or it shouldn't exist at all. As you see in the picture, it doesn't exist. It just has the long upper shadow. So it should have no lower shadow. Very small body. The upper shadow should be at least 2 times the length of the body. At least 2 times the length of the body, and it is. The upper shadow is. We already talked about how to read wicks and stuff in the fans. Y'all should know how to read that by now. So the lower shadow should not exist. The upper shadow should be 2 times the length of the body, and the long upper shadow gives the candlestick its name because when you combine with a small body and it's located after an uptrend, it resembles a shooting star. Alright, so how do you trade the shooting star pattern? The shooting star is a bearish reversal signal, which means it indicates that price has reached the top of a current uptrend and will fall soon. During the previous candles, the bulls have been in control, pushing the price higher into an established uptrend, but during the current session, the bulls continued pushing after the market opened, but then bears stepped in. The price was driven back down to the close near the starting point. The bulls have lost control. To better interpret this candlestick formation, look for the following characteristics. If there is a gap between the body of the previous candle and this candle, the likelihood is a strong reversal is high. The color of the body is not important, but it should be a black, because black is for bearish. So a long upper shadow should have a long upper shadow, and when you see it, it's a higher potential for a reversal. All right, so we have inverted hammer, and those are all the single, real big single candlestick patterns that you want to see. We're going to do inverted hammer right now, and then we're going to go over the triples, and we're going to go over the doubles, and then we're going to take a quiz at the end. Alright, so let's go over inverted hammer. It looks identical to the shooting star. So inverted hammer. Boom. We have inverted hammer. It looks identical to the shooting star. An inverted hammer is a single Japanese candlestick pattern. It's a bullish reversal pattern. It is formed at the end of a downtrend. It is formed at the end of the downtrend. The opening is low, then price trades higher but closes near the opening. The inverted hammer candlestick pattern consists of a black or white candlestick, and it's an upside down hammer position. It's the hammer, the body, the wick will be poking at the lower. It will be a lower wick poking out, but the inverted hammer is poking at the top. It looks identical to the shooting star. So, it's a bullish reversal pattern. The bearish reversal version, the bearish version of the inverted hammer is a shooting star that occurs on an uptrend. Okay, shooting star means going down. Inverted hammer, though, after a long downtrend, the inverted hammer is a bullish reversal pattern because It decreased in price was limited, saying staying near the opening price. Instead, price was able to rise, but seller returned price and pushed price back down near the opening. But the fact that price was able to increase significantly shows that there are buying pressure. What happens during the next candlestick after the inverted hammer pattern is what gives traders ideas as to whether or not to push price in for buys. To identify the inverted hammer candlestick pattern must have the following criteria. The candle must occur after a downtrend. The upper shadow must be at least 2 times the height of the candle body. The upper shadow must be at least 2 times the height of the candle body. The lower shadow of the body of the wick should have very or not existing at all. The body should be located at the lower end of a trading range, and the color of the small body isn't important, though the color should signify a bullish sign with more of a white or green color. How to trade the inverted hammer. The inverted hammer candlestick formation occurs mainly at the bottom of a downtrend and can act as a warning of potential trend reversal. The longer upper shadow is more likely that a reversal will occur. The longer upper shadows show that more likely that a reversal will occur. The gap down from the previous candle closes sets up a strong reversal. A large value on a session of the inverted hammer occurs, increases the likelihood that a blow-off to the top has occurred. A white body is more of a bullish than a black body inverted hammer, and a pattern is a warning for a potential price change, not a signal in itself to buy. So it's not a signal for itself to buy. For that to be a signal for to buy after the inverted hammer, you will need to see at least 1 white candlestick or 1 green candlestick or 2 white or green candlesticks for that inverted hammer to be validated. Alright, so that was all the single candlestick patterns we just ran over. We're going to go over the double candlestick patterns right now, and we're going to do the triple candlestick patterns, and then we're going to take a quiz. Alright, so gang, we're not going to get confused. We're just going to do the single candlestick patterns right here, then we're going to break down the double candlestick pattern, then we're going to do the triple candlestick pattern, and then we're going to take a quiz. Alright, so gang, I hope this helps. It's your boy Nature, aka Nature. Gang.